With the last quarter of the year already here and the upcoming due date for the last quarterly payment of corporation tax being December 15, the Guyana Revenue Authority is urging companies to ensure that they pay up this tax and any outstanding corporation tax, since penalties will be applied for non-compliance. Corporation tax is a tax imposed on the chargeable profits of companies, whether commercial or non-commercial. As to the difference between a commercial and non-commercial company, tax specialist Joyet Garaway explains.
Okay, a commercial company is one that gets most of its, at least 75% of its profits from trading in goods that is not manufactured by it. Okay, an example would be a company that trades in shoes or clothing, whereas a non-commercial company would be one that garners most of its income from manufacturing goods.
Companies are required to pay advance corporation tax based on estimation on a quarterly basis on March 15, June 15, September 15, and December 15. Should there have been an underestimation of the tax, then this balance payment should be made on or before April 30.
Commercial companies are required to pay corporation tax at a rate of 40% of their chargeable profit, while non-commercial companies are required to pay at a rate of 30%.
Filing a corporation tax return after the due date attracts a 2% penalty of the tax assessed, and in cases where the Commissioner General issues a demand notice for the return to be submitted, the penalty is 5% of the tax assessed if the return is not submitted within the time specified in the notice. There are other ensuing penalties for taxes unpaid by the due date. For each month or part thereof that the tax remains unpaid during the first 3 months after the due date, a 2% penalty per month is applied. For each month or part thereof during the next 3 months, a 3% per month penalty of the unpaid amount is applied, while for each month or part thereof during the next 6 months, a 4% per month penalty of the unpaid amount is applied. Meanwhile, for each month or part thereof after 12 months of the due date, a 5% per month penalty of the unpaid amount is applied. New companies which may have recently been established are also to note that they are required to pay the tax. In the case of overseas companies operating in Guyana, the law also applies to these companies.
The company in the contracting state, in this case Guyana, is required to deduct 10% of the profit and remit it to the GRA. This payment is required to be done within 30 days of deduction. If they deduct it on the 1st of October, by the 30th of October, it should be paid into the GRA.
Companies are again urged to ensure they remit this tax to the GRA now to avoid the penalties and any additional ones that can apply for delayed submission.